Well, Max Ventures recently launched its first luxury project in the Delhi NCR region, and it's flying off the shelves because we have already seen the pre-sales, launch of almost 1,800 crore rupees, which has been already done in the first few days itself. Let's try and decode that, plus how the fundamentals of the real estate sector are panning out. We have with us Mr. Sahil Vachani, the MD and CEO at Max Ventures, joining us on the show. Hi, Sahil. Thank you so much for making time and speaking with us.
Good morning. Thank you for having me.
Sahil, let's begin with this latest launch of yours. It's literally flying off the shelf. Talk to us about when do you see the project commissioning? What are the other details? When do you expect it to completely sell out?
Thank you. So we have launched 1 million square feet at our first residential development in the NCR region. The project is called Estate 128. And we're delighted to share that 100% of our inventory has been sold in the pre-formal launch phase. We have been able to get an average realization of 18,000 rupees a square foot. As I said, it is completely sold. The project is expected to start construction in the fourth quarter of this calendar year, and we anticipate to complete it within the RERA timelines of four years or so.
Wow, that's something 100% sold out. But given the strong traction that you're seeing in the luxury and the premium segment itself, are you likely to focus more towards these verticals? And is that the case how you are choosing your land parcels as well?
So we have already stated our strategy, which is to grow by 1 million square feet in both residential and commercial every year. If you see, we had acquired this last year, and in addition, we have also got a piece of land in Gurgaon, which we are intending to launch in the next calendar year. That will be about 2.5 million square feet of development on residential side, which is going to be the first intergenerational community that will come up in the National Capital Region. In addition to that, we've already started work on 2 commercial projects, one in Noida and one in Gurgaon. So yes, we have a pipeline of about 3.5 million square feet of residential and about 3 million square feet of commercial, and we will look to continue to grow on the same lines as we have committed, which is 1 million square feet both for commercial and resi every year.
It's quite an ambitious target and you're on track for that. But just wanted to understand, will the focus continue to be on the NCR region for the time being, or ultimately you would like to diversify out of that micro market?
We will continue to focus in the National Capital Region. We believe that there is a big market here and we need to establish ourselves on a very firm footing. So we will continue to focus in the National Capital Region in the years to come.
Sahil, but what about the funding of this rapid expansion, the 1 million per year kind of targets that you have in mind? Do you already have the funds in place? Would you be looking at maybe partnering with someone or raising the equity at maybe some project levels or consolidated level?
So we've managed to raise equity already. If you see in Max Ventures and Industries over the last 4 to 5 years of almost 14 to 1500 crores of equity. We raised that through a combination of a rights issue that we did in 2018, with the exit of our packaging business in 2 tranches, through which we raised 800 crores, and bringing in New York Life as our co-investor around the office on the office space projects. So we've raised a significant amount of equity, which has funded all of this growth. And I'm happy to share that all our land parcels are funded primarily with equity. We will take limited amount of construction finance for during the construction phase, but all our land acquisitions will continue to happen through the equity route.
Okay, so the funding is already in place and large part will be through the equity route itself. But Sahil, what about the top line potential given the slew of launches that you talked about? What kind of growth rate should we expect on the top line for the company, let's say for the next 1 to 2 years?
Like I said, we are continuing to focus on 2 asset classes, which is the commercial asset class, under which we have Max Towers, Max House, which are completely built and leased, and Max Square that's come on stream recently, that's undergoing leasing currently as we speak. So there's going to be a balanced approach of a residential vertical, which is going to be about 1 million square feet a year, and a commercial portfolio that is going to be an annuity or a rent yielding portfolio. So we are looking to build the portfolio with a combination of both of these moving forward.
I was looking to get a number from you with respect to the guidance of Topline, but I appreciate that. Nonetheless, I just wanted to understand from you, do you expect this the year FY24 to be better than FY23? And I'm talking for the entire real estate industry here. Given the fact that there were these headwinds of interest rate hikes, etc., there was a worry that demand might plateau. We haven't seen anything of sorts right now, but overall, what's your expectation for the entire industry?
So we are seeing a significant consolidation, that trend that has been going on for the past many years, and we are continuing to see that towards more institutionalized, organized developers. So we are seeing a trend towards that. B, we are seeing that there has been a focus on end customer experience and the quality of product. So there has been a shift to or a flight to quality, as we can call it that. So we continue to see that for those players who are adopting these two or fall in these two buckets where they are either moving their products towards a higher quality product or they are corporate institutionalized developers with a very high level of governance. We believe that the market for those in these two buckets will continue to be very strong and do well.
Okay, consolidation is the name of the game. But Sahil, since I have you with us, I want to discuss the commercial real estate also a bit. Given the headwinds that we are talking about globally, the corporate behavior has been a bit muted. Are you seeing any sort of impact in terms of your occupancy or the tenancy or the rentals?
So two things. One, we are seeing occupancy come back. So we are almost seeing in our occupied buildings 75% of the full occupancy of the building, which is similar to pre-COVID levels. So we are seeing that from an occupancy perspective. From an operator perspective, it is clear that there are a couple of trends that have now, at least in the early stages of looking like they are being established. The first is acceptance of a hybrid work model where it's okay to work from home a couple of days a week. And companies are preferring for employees to come back into the office for a few days in a week at least. As a result of this, the co-working or the managed office players, that demand for those we continue to see rising. The second.
All right, so that is the management of Max Ventures. But let's move